No extra lines, just pure flow designed to hold viewers till the end. They call him the Oracle of Omaha, a man who turned a few $1,000s into one of the largest fortunes in the world. Warren Buffett's story isn't about luck, inheritance, or secret stock tips. It's about discipline, patience, and a mindset so rare that it turned him into a billionaire long before technology, crypto, or social media made anyone famous for being rich. What separates Buffett from everyone else isn't genius. It's his ability to follow a few simple rules that anyone can apply, if they have the courage and patience to do so. Buffett's first rule is so simple that most people ignore it. Never lose money. And his second rule? Never forget the first one. It sounds funny, but to Buffett, protecting your capital is sacred. He doesn't chase the next big thing. He doesn't gamble on hype. When Buffett invests, he makes sure the downside is limited and the upside is meaningful. Every dollar he invests is treated like a soldier. He sends it out into the world to bring back more soldiers. That's why he avoids high-risk opportunities, even if they promise high returns. He knows one bad decision can destroy years of progress. Most people think of making money as an act of taking risks. Buffett thinks of it as minimizing mistakes. His genius lies not in taking big swings, but in avoiding big losses. The second rule Buffett lives by is to think long-term. He once said, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. That single line explains how he sees the world. Buffett doesn't try to predict what will happen next week or next month. He looks decades ahead. He buys businesses he believes will still be strong, profitable, and essential long after he's gone. This is why he invests in simple, timeless companies, brands people trust, and products people use every single day. When he bought Coca-Cola, people thought it was boring. When he bought Apple, people thought he was too late. But Buffett doesn't care about excitement. He cares about endurance. He says the stock market is a device for transferring money from the impatient to the patient. And that's exactly how he wins, by waiting longer than anyone else. The third rule is to invest in what you understand. Buffett doesn't touch anything he can't explain in a few sentences. He doesn't invest in industries filled with jargon, and he avoids complicated technologies that he can't predict. Early in his career, he skipped the dot-com boom while everyone else was rushing in. People called him outdated, slow, even foolish. But when the bubble burst, Buffett's steady hand looked genius. He says, "The best investment you can make is in your own understanding." He reads obsessively, studies business models, and asks one question before buying: how does this company actually make money? That's what most investors miss. They get distracted by hype instead of focusing on fundamentals. Buffett's simplicity is his superpower. He once joked that he tries to be fearful when others are greedy, and greedy when others are fearful. But underneath that line lies a deeper truth. He never lets emotions or trends cloud his judgment. The fourth rule, and maybe the most powerful of all, is to let compounding do the heavy lifting. Buffett's entire fortune is built on time. He started investing when he was just 11 years old. By the time most people were figuring out what to do with their lives, Buffett had already learned the one secret most never grasp, that the earlier you start, the harder your money works for you. Compounding is what turns small, consistent gains into extraordinary wealth. Buffett didn't get rich fast. He got rich steadily. In fact, over 90% of his net worth came after his 60th birthday. That's the magic of compounding. It doesn't seem impressive at first, but over decades it becomes unstoppable. Buffett once said, "Someone is sitting in the shade today because someone planted a tree a long time ago." That's how compounding works. You plant seeds early, nurture them patiently, and one day you're surrounded by a forest. The fifth rule is emotional control. Buffett believes temperament is more important than intelligence. He's said many times that successful investing has little to do with IQ and everything to do with character. The market is a place where emotions run wild: greed when prices rise, fear when they fall. Most people chase profits when it's too late and panic sell when it's too soon. Buffett does the opposite. When markets crash, he looks for opportunities. When everyone else is euphoric, he becomes cautious. In 2008, when panic consumed Wall Street, Buffett invested billions in companies like Goldman Sachs and General Electric. People thought he was crazy. But years later, those moves made him billions. His calm in chaos isn't luck, it's discipline. He has trained his mind to detach emotion from decision. The stock market, he says, is a device for transferring money from the impatient to the patient. The sixth rule, and perhaps the most surprising, is to live below your means. But behind these 6 rules lies one ultimate principle that ties them all together: patience. Buffett's success isn't the result of a few great decisions. It's the result of thousands of disciplined, boring, and smart ones repeated over decades. He doesn't need excitement to feel successful. He doesn't chase trends, timing, or hype. He trusts the process. He allows time to do what time does best: multiply the small, consistent actions that others overlook. Warren Buffett's philosophy can be summed up like this: make your money work harder than you do. Every dollar is a worker. Every investment is a seed. Every decision is a test of patience. You don't need to be brilliant, you just need to stay consistent, calm, and curious. Buffett says investing is simple, but not easy. It's simple because the rules are clear. It's not easy because emotions get in the way. He doesn't need perfect timing, he just needs time. And while most people quit too early, Buffett keeps going long enough to let the results speak for themselves. Think about it, Warren Buffett doesn't have secret information. He reads, he studies, and he waits. That's it. In a world addicted to speed, he moves slowly. In a world obsessed with noise, he listens quietly. His wealth is a reflection of his mindset, not just his investments. He once said, "The most important investment you can make is in yourself." That means building habits that help you think clearly, control your emotions, and make better financial choices every day. Buffett didn't become a billionaire overnight, and neither will you. But his story proves that consistent, rational, long-term thinking will always outperform luck or speculation. These 6 rules are not just strategies for investing, they are principles for life. Protect what you earn. Think long-term. Understand what you invest in. Let compounding work its magic. Control your emotions. Live simply. Follow those rules long enough, and money will no longer be something you chase, it will start chasing you. Warren Buffett doesn't play the game of getting rich quick. He plays the game of never running out of time. And that's what true wealth is: not how much money you make, but how long it lasts. If you start now, follow these 6 simple rules, and stay patient, one day, you'll realize that the world's greatest investor wasn't a magician or a genius. He was just a man who understood how money grows quietly, steadily, and inevitably when guided by wisdom instead of emotion. Would you like me to adapt this same 1,500-word script into a *** YouTube narration format *** with pacing, pauses, and emotional emphasis for voice delivery? It'll sound cinematic and keep your audience hooked from start to finish.